अर्ज किया है, बुलाती है मगर जाने का नहीं, बुलाती है मगर जाने का नहीं। अरे ये ब्लू चिप है यारो, अब इस दाम पे इसको छोड़ने का नहीं। Hey folks, CA Rachana Ranade here and I welcome you all to a very amazing video which is about 5 blue chip stocks which are available at an amazing discount. So without any further ado, let's get started. Now let's understand what are the selection criteria for all the 5 stocks that we are going to discuss today. The very first one is that it has to be a blue chip stock. It should be like, bas naam hi kafi hai. The second one is that it should be a part of Nifty 50. And the third one is that it must have fallen almost 15 to 25% from its 52-week high, right? So with this, the very first company that we are going to discuss today is TCS. Everyone knows that TCS is the IT arm of the Tata Group and it is primarily engaged in technology service and consultancy business. It has a weightage of 4.89% in Nifty with a market cap of almost 11.5 trillion. If I'm talking about what was the price at a 52-week high, it was 4,043 and from that it has corrected almost 24%. At the all-time high, its PE was 39.5 and currently the PE is around 28.8. Please understand whatever I'm saying, this is as on the record, as on the shoot date, but you might watch the video at another date and at that time, the data points might be a little bit different. Coming back to some, negative points for TCS, everyone knows about the high inflation, everyone knows about the possible recession, but is there any pain point especially for the IT sector? Answer is yes, and it is the attrition rate. Just to simplify this for you, attrition rate is the rate at which employees leave the organization. One more example, simple example can be assume that for any IT company, that number of employees are 100. And in this year, let's say 20 people left the organization. What will be the attrition rate? 20%, right? This is the simplified version of attrition rate. Now, attrition rate, if it is high, then is it good or bad? Obviously, answer is bad. Why? Because more and more people leaving the organization is equal to company needs to do more and more of recruitment. Now, new people joining in may come at a higher package. New people may require additional training and the recruitment costs can go higher. Now, with all the scenario for this company for Q1 FY23, attrition rate was 19.7% and for the previous quarter, it was 17.4%. When the management was asked that what do you feel, is this the highest possible attrition rate or the pain still exists? Management believes that maybe the attrition rate can go a little bit higher in Q2 as well because of the seasonality issue. Now, what is the seasonality issue? Management says that, typically the fresh recruits, the engineers, they may go for masters abroad and that is the reason why typically during August and September the new admissions start and that's the reason why attrition may be higher in Q2. Now with this basic point, attrition, is it bad only for IT companies? No. Attrition is also bad for YouTube creators. You don't watch the video till the end is equal to my attrition rate during the video is very high, na? So keep on watching the video till the end and so that you get more motivation. I'll tell you 2 very nice points about TCS also. In 2008, when this stock also fell down like any other stock, this stock saw 400% rally in a span of less than 3 years. That's an amazing rally. And one more plus point or one more amazing point of TCS is that they are the ones who set up or who laid the core foundation of electronic trading at the National Stock Exchange. The second company that we are going to discuss today is Reliance Industries Limited, and everyone knows that it is headed by the business tycoon Mr. Mukesh Dhirubhai Ambani. Well, he's the one who actually disrupted various business segments and has changed the life of common man in a good way. This company has currently a market capitalization of 16.17 lakh crore and this company has a weightage of 12.94% in Nifty. From its 52-week high, it has gone down by almost 16%. Other than the normal reasons, is there any specific reason for Reliance? And answer is yes. I'm sure you might have read about this, that government recently introduced the windfall gain tax, wherein they decided to tax domestically produced crude oil. With this, it is going to have a negative impact on the earnings of refineries like Reliance Industries Limited. When the stock was trading at the 52-week high, its PE was 36.4 and currently the PE is at 27.3. Well, back in 2011, they came up with the idea of Jio, and that's where they started disrupting the entire telecom space. They laid down the foundation or huge network of fiber optic cables, which gave India not only abundant quantities of data, but also data at a very high speed. That's how I can say that they not only stuck to oil, but also forayed into the telecom space via Jio. But that was about the past. What about the future? They are now set to disrupt the space of green energy. They have recently announced an MOU with the government of Gujarat to invest 5.9 trillion rupees in green projects, through which they are going to make the state a net zero carbon emission by 2035. I'm sure everyone has heard about green hydrogen, wherein they are planning to use this to act as a substitute for crude oil, but this is just a part of the entire green energy space. I think that's how they are futuristic, and if they go ahead with one more point of listing Jio as well as Reliance Retail, I think that's where the true value unlocking can happen for the shareholders. Well, we are going to do the analysis of 3 more companies, but before that, I would want to tell you that you can always visit my website rachanaranade.com. If you want to gain much more knowledge about stock market, just go to the courses section, and that's where you will find the courses also about fundamental analysis. If you click here in the company analysis course, you will be able to understand that there are a lot of quantitative and qualitative analysis that you can learn. You can also learn this course with a lot of practical case studies as well. So if you want to know more, just click this I button and get on to www.rachanaranade.com. Well, let's move on to the next third company, which has been formed in the pre-independence era back in the year 1942, and it has dominated their segment for the last 54 years. Which is that company? It is Asian Paints. This company has a weightage of 1.76% in the Nifty 50 index with a total market capitalization of 2.82 lakh crores. Currently, it's down by 18.5% from its 52-week high of 3,590. Apart from the normal factors, any specific point for this company because of which this stock corrected? Answer is obviously yes. The answer is the problem in crude oil. Crude oil is one of the key raw material components for any paint industry, and if the crude oil prices are high, the raw material price is going to be high for these companies, and which might impact the profitability in a negative way. The PE of this stock, when it was at its 52-week high, it was 105.4, and currently the PE is around 91.6. But why does this company command such a high PE? Are there some amazing points for this? Answer is obviously yes. And today we are going to talk about 3 amazing facts of Asian Paints. Well, this is the company which has maximized its shareholders' wealth, and the share price has grown by almost 72 times since its debut in the market. The second amazing fact is the way they penetrated into the rural market. They observed that during the festival of Bail Pola, the horns of bullocks are painted, but the problem was that small quantity paint boxes were not available at that time, and that's where they concentrated and they penetrated very nicely into the rural segment, and slowly steadily they moved from the rural segment to the urban segment. The third amazing fact about Asian Paints is that they had their first ever supercomputer in India, which was like 10 years before even ISRO had it. And it was like 21 years before any other company had it. So I believe the technological advantage that this company had was next level, and that's how they were able to manage their supply chain in a very effective way. But this was about the amazing facts. This was about their leadership that they had for the last 54 years. What about their current market strategies? They are planning in such a way that they want to remain the market leader even for the next 50 years, and that's how they are launching more and more DIY products. Now, what is DIY? Do it yourself products. They are not, the second strategy that they are using is that they are not only sticking to paints, they are also foraying into different business verticals, including what? Including modular kitchens, color consultancy, decorative paints, painting tools, and few more, and that's how they are increasing the offerings for the company. The third one is that they are bringing in revolutionary products, and they have done this in the past as well, and they say that they are planning to do that in the future as well. The next one is HDFC Bank, which is the largest private sector bank in India in terms of market capitalization, which is 7.5 lakh crores. It accounts for 8.55% weightage in Nifty, and this bank has also created 89x wealth for its shareholders since its listing. HDFC Bank currently is 21% lower as compared to its 52-week high of 1,725, and when it was at its 52-week high, its PE was 28.4, and currently the PE is around 19.9. But the big question is that how was HDFC able to establish its monopoly in spite of the foreign banks which had a very big strong foothold back in the 1990s. In addition to all these things, back in 1990s, if I'm talking about the years 1992, of course, there were many events, no need for me to tell that, but there were many events because of which the faith in the banking system was also a little bit topsy-turvy. But it was then when HDFC Bank came up with a check settlement system which changed the game. They basically targeted cooperative banks wherein they allowed a facility of interstate transfer to the cooperative banks. Now at that time, because cooperative banks typically have presence only in one state, the customers of such cooperative banks, if they have to issue checks to some other party in another state, it used to take almost 8 to 10 days to clear the check. HDFC asked them to issue at par checks to the customers of cooperative banks so that they could reduce this settlement system from 8 to 10 days to just 1 to 2 days. They allowed this facility to cooperative banks and to their customers free of cost, but they said that you have to deposit money with HDFC Bank, and that too at interest-free rates. Because of this, the deposit book of HDFC Bank grew at a CAGR of 31.63%. But this is all about the past. What about the current and the future? I'm sure everyone has read about the HDFC Bank and HDFC merger, because of which many people believe that this can change the game for the bank. What are 5 amazing points about this merger? Let's discuss them quickly. The very first one is that the cost of funds for HDFC Bank is now going to be surely lower, because earlier HDFC Limited, their cost of funding was very high, but for the bank cost of funding is very low because of CASA deposits, that is the current account, saving account deposits. Now with this merger, both will have an access to a larger and a bigger platform. The third point is that because of the rich experience of HDFC Limited, how much rich experience? 45 years plus experience in the home loan segment. Now this merged entity will have good and better benefits with the same. The fourth point is that they will have some nice cross-selling opportunities, because it is found that 70% of the customers of HDFC today do not bank with HDFC Bank, and that's where the cross-selling opportunities can be pretty high. The last point can be that CRAR requirements, that is a capital risk adequacy ratio, for banks are typically lower than NBFCs, and because of which the ability to fund or ability to give loans will now become a little bit higher. And the final company for today is UltraTech Cement. Let me start with a fun fact. UltraTech Cement was incorporated as L&T Cement, and you might be like, does it have any connection with L&T, Larsen and Toubro? Answer is yes. It was a 100% subsidiary of Larsen and Toubro back then. But in 2003, ABG acquired it and renamed it as UltraTech Cements. Well, currently the stock has fallen almost 30% from its 52-week high of 8,269, and it is currently trading at a PE multiple of 22.9 against the 52-week high PE multiple of 37.1. But other than the normal reasons of the fall, what was one reason that triggered the fall of UltraTech Cement? One of the reasons was shortage of coal. You might be like, what is the connection between these two? Those who are my pro investor members, they know this because I've done a separate video for the pro investor members about UltraTech cement, and in this I've told about how heat or how the overall power and fuel basically forms a major chunk of their entire P&L, and coal is one of the key raw materials that they require for this entire purpose. As far as UltraTech cement is concerned, it is the largest manufacturer of grey cement. They have grey cement, ready to mix concrete and white cement in India, and it is the only company to have a capacity of over 100 million tons, of course if I am excluding China from the picture. Well, now the next question comes up to our mind is what made it the market leader? There are multiple reasons for the same, but one of them is that they have a wide geographical presence. They have 22 manufacturing units which are spread across the country, and all these units are set close to the limestone mines, which are again one of the key raw materials for cement. They also enjoy key synergies with Grasim for sourcing of raw material, or be it for common branding, be it for dealer network, logistics, or even exchange of key personnel. UltraTech recently announced an investment of 12,886 crores to add to the 22.6 million tons capacity per annum to its total production, and post this, they will have a total capacity of 159.25 million ton per annum. I hope you have understood about the key points of UltraTech cement. Well, I hope you understood about all these 5 stocks, and I hope you are able to gather about some basic information. You are able to understand some key strengths, some weaknesses about these stocks, but please be aware of the fact that we have not done a full-fledged fundamental analysis of all these 5 stocks. Had I done so, it would have been like a 2-hour long video, right? But this was mainly to tell you how blue chip stocks can perform well in the longer term if the strategies are right in place. I hope you enjoyed this video, but because you liked it, don't jump and buy this all these stocks all at one shot. If you love the fundamentals, you can consider starting an SIP in all these 5 stocks. If you want to know more about these stocks in detail, especially about Reliance Industries, you can click here. And if you want to know more about Asian Paints in detail, you can click here. Till then, take care. Jai Hind and bye-bye.